Very good. Hey everybody, it's me, JJ Panzer, your smart apartment advisor, back with another weekly call with all of my wonderful clients. It's great to see you. Thank you for joining me today. There's not a whole lot to discuss, though. If you have a chance, take a look at KPIX Channel 5 tonight at 6. They're going to have a story about the rental market featuring yours truly. I did an interview today at one of our nice listings that we're getting ready to bring on the market in the next few days. And so I'm looking forward to how that comes out. I think it should be a pretty good story. But, you know, it's the story of the truth, what's actually happening in today's market. It's very difficult. It's the story of the fact that the people that drive our market, people coming to San Francisco for work, for school, for culture, for technology, aren't coming here anymore. And a lot of the people who came here for that left. And so there's a lot of supply and not very much demand. And contrary to what a lot of our housing activists say about the housing market in San Francisco, it is subject to supply and demand, the forces of the economy. And so prices do go down when there is too much supply and not enough people to fill it. And so, you know, it's interesting that the angle that I decided to take when the reporter called me to say he wanted to do another topic. You know, he started with well, you know, last time we talked, you were discussing how you could offer a free month's rent to try to entice a tenant. And that was middle to the end of July, I think that was. It was a month ago. And that's not working. It's just not getting me anywhere that I want to be. People are rejecting that and saying, no, just lower my rent and I'll stay. And there's nothing I can do about it. I don't want any more vacancies. I have more than I can handle as it is, and I'm scrambling to try to get them rented. And there aren't that many people coming out to look at them. And so there's really two paths that you have to take. And in a down economy, you can either cut your price and compete on price, which means that you're going to make less money, or you can invest in units. You can provide all the amenities that people are looking for. You can trick them out and make them really, really nice so that they're the best and most competitive units. And hopefully you can retain at least some of your pricing power. You're not going to continue to retain it. The units that I featured, or the unit that I featured in this story, was a fully renovated, gorgeous property in Nopa on Grove Street that my client is a high-end home builder, and he bought the property for himself. And he's got 2 rental units in the building, and they are just done out to the nines. He's got, his top floor unit has air conditioning, because he figured if I'm going to go for it, I'm going to put in all the duct work. I'll put in air conditioning too. His bottom unit has radiant floor heat. They're 4-bedroom plus units. They've got plenty of space, extra bathrooms, nice fixtures, the whole thing. And, that's one way. If you're coming to the market, that's one way to make sure that you can at least maintain some level of protection from the falling prices. But the market is what it is right now, and the people that we normally have just aren't coming here. So I'm talking to my clients about doing things like adding laundry in unit if they possibly can. It's one of the biggest amenities. It's one of the best ways. Doing better quality renovations, putting a little more money in. If it takes a little longer, it's probably going to be vacant a little longer anyway. So, maybe we, make a bigger investment in units if we possibly can. And so, that's what it is. So check it out. KPIX tonight at 6 o'clock, Channel 5, San Francisco. I will share links to the story after it comes out online. The last story that I did, he said the online story got over 1 million views, which is really good. He said, the last time we talked, the time before that, I think he said they get 50 or 60,000 hits, and they got 500,000 on my story at that time. So, it's something that people are interested in. And, the other interesting topic of discussion was my client called me after I told him I was going to do this. And he said, do we really have to shout it from the mountaintops that it's a bad market? And I said, yeah, but it's the truth. And it's not like, honestly, nobody is getting their first glimpse of the fact that the rental market is bad for landlords from the fact that they watched a KPIX news piece on July 29th at 6 o'clock in the evening. Everybody knows this is happening. And the better I bring myself and my clients out in front of it and say, we understand it's happening, and we're here to try to rent. And I gave some advice in the piece. I don't know whether he'll use it, but the advice is, for a tenant, interview your landlord. Work with people that you think you'd like to be in a relationship with for a year or two, because at the very least you're going to have them as somebody you're going to work with for a year. So pick a place, not necessarily solely based on the price. Pick a good relationship, because I think that's really important for everybody. So, with that, I'm happy to open it up for discussion. If anybody has thoughts or ideas, questions about how things are going these days, I'm happy to discuss it. If you want to move on, I'm happy to bring in Josh. It looks like we don't have Denise today. But I'll bring Josh in to talk a little bit about the sale market. Josh doesn't have a deal of the day today, but we have some interesting statistics to share. So why don't I bring Josh into the conversation here? And spotlight. There you are. And go ahead and unmute yourself there. You got to press the button. Oop. There you are. There we go.
Good afternoon, everybody. All right. So yeah, today I didn't really see a deal that I particularly liked today. There's still new properties coming out. Still some stubborn sellers selling, thinking they can maintain their last year's prices. So properties are sitting. Some are moving. There's definitely sales happening, but I'm seeing a lot of some struggles in terms of properties moving in San Francisco in particular. But the stats that I have today are about, so the data has come in on the apartment market in San Francisco for Q2. Q1 and Q2 are now in. So this shows you, this first chart here shows you active listings. And so, obviously, in 2018, 2019, apartment buildings they were booming. You couldn't keep them on the shelf. People were paying low cap rates. And then Q4 in 2019, you see a big drop off, but Q4 is always slower, except for Q4 in 2018. But Q4 in 2019 was slow for whatever reason. But then you get into Q1 2020, and that's when you start to see COVID have an impact. So Q1 and Q2, you see the number of listings just really plummeting from 2019. So just a lot of people who have buildings to sell and are just not bringing them to market is kind of what's happening. We've mentioned this many times. It's just not a great time, obviously, to sell, especially if you have vacancies. I just saw a building come on the market today. It was like 15 units and 12 are vacant, and they were selling it at a 3.5 cap, meaning 3.5% return once those units are leased up. Right. And I'm like, you are out of your mind to buy. I mean, 2 years ago, you see a building with that kind of vacancy, you're real excited and you're jazzed and you're buying and you're like, I'll buy, I'll take a 3.5 cap, and I'll make it a 4.5 cap because I'll do XYZ improvements to the units and I'll add bike racks and blah, blah, blah. But now you're like, I don't know how you buy a building that's 80% vacant right now. So, there's things like that happening, but so a lot of people just holding buildings off the market until we get through this pandemic is kind of what I'm seeing here. Next chart, listings closing sale. So this is units that, buildings that have closed escrow, that have been completed. So Q2 in 2020, you're seeing, even from Q1, you're seeing a 50% drop. So Q2 has been significantly affected. you in Q1 you had deals that were in contract when COVID hit, and they still closed. You know, we went in, shelter in place was what, mid March,
March, yeah.
right? So so there was still activity happening, but by the time we get into Q2, you see only 17 closings in the quarter, which is quite low. You do see some fluctuations in this. So it's, you know, Q1 2019 was only 21, but then Q2 in 2019, 44. So, you know, things maybe longer escrow periods or whatever, but again, a big drop in closings. You move down here. Now what's kind of interesting is the price per square foot is actually up from 2019 on apartment buildings. And the only thing I can, you know, I find that very interesting. And the only reason that I can think to explain that is that there's so much less inventory out there, that what people are buying are really choice properties, or really like kind of the best of the best, and they're willing to pay a higher price per square foot because of the reduced inventory, and then just the better quality properties that are moving at a high number. And people are like, oh, that's a beautiful building, I don't care, I'll buy it for a low cap rate, high price per square foot, and wait this out. But you know, that's the one thing that's kind of, I'm like, whoa, that's interesting. It also is in line with what I've been talking about, a lot of sellers not really adjusting pricing, still kind of holding on to 2018, 2019 numbers, and bringing their properties out for, you know, in your mid 500s price per square foot valuations. And so, and some of those buildings are moving. But, you know, that was pretty curious to me, that I would think that it would have dropped. And I'll show you cap rates in a minute, because it's also kind of holding steady. Same thing, average price per unit, just another metric, another way of looking at these deals. Price per unit is holding steady at the same prices. Again, you know, so much less inventory is the big story, and so many less sales, but the prices of those sales are holding pretty steady. And I've said, you know, when I'm looking for deals, I've mentioned, you know, I'm not finding a whole lot all the time. I find those one or two that squeak through, and I've been watching those, and they're moving, but a lot of people are, you know, they're still not. There's no fire sales happening. You know, people are still kind of, you know, holding on to bigger numbers, but you do see deals squeak through, as I've mentioned many times here. So the cap rates, again, same kind of thing, same idea, as that, you know, when I'm excited to show everybody a deal, I'm trying to be in the 5 cap region, 5.5 cap. I think they're, if I'm buying an apartment building in San Francisco, I'm looking for a 5 cap right now. I want to price in that risk of having a vacancy that would be hard to fill, or 2 or 3, depending however big your building is. So I'm not buying. I'm definitely not buying in the 3s, and I'm probably not buying in the 4s. And I think you can hold on and look for a deal in the 5s. And so, you know, again, the cap rate actually has dropped a little from 2019, which is not expected. I would think it's going to move up. I think, again, the story is there's just people are not bringing their buildings out to market. I mean, right now is obviously a great time of the year to be bringing a building out, and there's just not many new listings coming out. So this is just average GRM, which is a stat that I'm not thrilled about using.
Hey, Josh, let me ask you a question before you go on from the cap rate discussion.
Yeah.
What would you say is the relationship between these cap rates that you're seeing and the interest rates in the market? How are they related to one another? And what do you think, what do you think of interest rates in the future? How do you think do you think they're going to go up? I mean, they can't go down much.
Yeah, I mean, interest rates have been low for quite a while now. They were low pre-COVID, and they've stayed low, right? So that's kind of baked into the market now. These interest rates, you're not seeing huge fluctuations with them. For an apartment building, you're right around 4%. So they're still really good. And I think now so those are, it's pretty stable. So not a huge relationship in terms of fluctuations there, but like, I just feel like investors are going to want to price more risk into these buildings. And so I think your cap rates are going to go up. People are feeling good about the interest rates and borrowing money. I mean, it's a great time to get a loan. But just the risk on these vacancies and these rents that are dropping, I just think that cap rate is bound to go up in terms of what investors will tolerate. So here's a chart that we all know and understand too well. You had average rents tracked over San Francisco since 1994. You had our peak in 2015, 2016. You had the financial crisis, the real estate meltdown, 2017 or so. And then we've been on a slow creep upward, as JJ has mentioned a few times, and we peaked out. And then we've gone off a cliff here a bit in Q2. So here, 11% average seems about right. 11% drop in rents seems about right in terms of what our experience is. Wouldn't you say that's about right, JJ?
Yeah, I think that's
creeping up to 20 at times.
Yeah, well, those are outliers. Yeah.
Yeah, but so this is kind of where we are. I think all these stats, support kind of what we've been feeling, and it's happening throughout the city. So we're back into 2013, 2014 numbers, and we'll go back up. This is a cycle. It's an up and down thing, but that's kind of where we're at there. This is a stat actually I was looking at, and I'm not totally familiar with measuring residents able to work. This is you see a big drop off in terms of folks in the Bay Area who are available to work. I don't know if that means to what degree they've dropped out of the labor market, but you're seeing a huge drop here. So I don't know exactly how one counts somebody who's dropped out of the labor market. So I'm not going to comment too much on this chart because I'm just not fully comfortable with it. But obviously, a Bay Area labor force decline is not good for renting units in San Francisco or anywhere else in the Bay Area. But this is where we're at here. That's kind of it. Interesting snapshot, I think, on the quarter, and happy to take any questions or hear any points of view, or if this is freaking anybody out, let me know, or wherever you're at.
What happened with the 10 units in Berkeley? It was that pretty old building. Did that sell? It was a really nice cap rate.
I'll look into it. Yeah, I'll look into that. I didn't track that actually today. I would anticipate it's in contract. I mean, that deal was pretty nice.
Yeah.
So I'll check that out and get back to you, Susie.
Josh, all of the things that you showed were 5+ units. Would you think that the smaller units would be any different than the 5?
You know, so when I look at buildings, so you know, a 2-unit building is very different than a 3-unit building, which is very different than a 4-unit building. So a 2-unit, and so it's hard to say. I like to look at, you know, so a duplex tends to be, you know, owner occupier, not investor. Triplex, a little bit like half owner occupier, half investors, and the fourplex, you're moving more into kind of the investor territory. So all of those groups price them differently. And I think, you know, with the owner occupier group, I think they're looking for kind of what other owner occupier, you know, single family home occupiers are looking for outdoor space. They're looking for a little more, what's that? Oh, sorry, it's in background. So it's hard to say. I would say that those markets are probably more stable. Anything, you know, 4 or less is probably more stable and sells better than 5 plus, especially if you're going to occupy a unit. If you're not occupying a unit, you're in the same boat. If you're buying a triplex or a 5-unit building, you're in the same boat in terms of your concerns about the market. But if you're occupying a unit, it's a different calculation. So it really kind of depends.
And it's based more on some of the home buyer factors of, oh, this place is so pretty and I can see my, you know, my furniture over here, which is a lot of what we deal with tenants and trying to rent units. Whereas, you know, the apartment building market is based almost completely on the numbers and, you know, what can I sell? And so, but I think we've dug into some of those numbers and we can continue to do that. Oh, look, Denise is here. Hi there. Hold on a second. There you are. I got to unmute you and you can press the button. Oh, there you are. Hi.
I apologize. I'm sorry.
That's okay. You're here. It's good to see you. We're still on the call, so that's perfect.
Great. Thank you.
Anyway, just to wrap up for Bert, I think we can dig into those numbers a little bit more on, you know, what the 2 to 4 unit market looks like, but, you know, being sort of besieged by home buyers that don't look at things quite the same way as investors makes that market a little bit more, have a little more demand. But we can look at that for next time and kind of give a little bit more of an update on the smaller buildings.
Yeah, I can look at 2 to 4s. Yep.
Yeah. So actually, since if anybody else has questions for Josh, we're happy to take them. Otherwise, now that Denise is here,
Hey, Joel.
I think, Dad, did you have a question?
Yeah, what's going on with refis? Are people interested and are banks interested?
My understanding is they are interested, but you just better be fully leased up. I mean, I don't think they're looking at anything with any vacancies. You know, banks aren't taking on that risk, but if you're leased up, stable tenant profile, I think, you know, depending on your loan to value, right? So, you know, they're not going to give you 80%, they'll give you 60 or something like that, or 65. You know, so they probably brought their loan to value down to kind of take care of this risk. And then just, you know, the vacancies would make them nervous, certainly. Right. And they don't price those in normally. But I'd say, you know, if you had eight units, you're trying to refi and you had 2 vacants, 25% vacancy, right? And it's like, I don't know, you know, what happens if we lose another unit there. So they'd probably shy away from that is what I would think. But I'm seeing people refi. It's happening.
Thank you.
Okay. Well, let me bring Denise on and we can have a quick update. Hi there. How are you?
Well, and you?
Doing pretty good. You know, the sun came out this afternoon, so that counts for something.
That's right.
Yeah. So how's everything going legally? Anything new to report or interesting to tell us about?
No, other than, of course, the mayor's extended the moratorium to the end of August.
Right.
And Friday is the hearing regarding what we're calling the Preston legislation. And we've been monitoring all across the country the positions of landlords when they're bringing up these issues to the courts. Of course, the majority of the other states' laws have to do with not forgiveness from eviction in the future. So there's a rent deferment currently, but with the ability to evict in the future should it not be paid. Of course, Preston's does not allow that.
Right.
And so across the board, almost entirely, all the landlords have been losing. So in other words, they're fighting just the deferment period, not the inability to file an unlawful detainer. So this is unprecedented, and it'll be really interesting to see what happens on Friday. We don't believe Judge Haynes is going to do us any favors. We think he's going to say, I'm not changing the law. That will require us to proceed up to the Court of Appeals, and we hope that we'll see some joy there.
Okay, well, that'll be interesting. They might actually look at the law and say, hey, wait a minute, this is an illegal taking, and you can't take away somebody's right to collect forever.
That's right.
Right. So,
amongst other things. I mean, obviously, it's also a supervisor suggesting that they know better than the judiciary, and that is what's really going to be interesting.
Yeah, that's that will be interesting to see how the courts feel about that.
That's right.
Even in very, very blue California. Yeah. All right. Was there anybody had specific legal questions? Wanted to know where we're at with anything? I think one or two people said they were wondering. Oh, Bert, go right ahead.
Yeah, I just wanted to find out are you hearing any status on Prop 10? Any surveys or anything like that?
No, other than to please proceed to fund the next wave of what's coming in November. That we need to fight the Prop 10 or Prop 10 redone
21.
or whatever they want to call it.
It's Prop 21 now. It's gotten a number on this ballot. And interestingly, some of the ads that are running at the state level in Sacramento are very concerning, linking gentrification and racism and trying to sort of bring this issue into a Black Lives Matter racial equality issue, which is, that's a novel tactic. So, that's interesting. But yes, make your contributions now. And go ahead and make them online. I'd be happy to know that you supported the campaign if you choose to do that. Recommended donation level is $100 a unit. I would say the minimum you should consider giving is $500, even if you only have a couple of units. Please give $500 minimum. They are going to need millions and millions and millions of dollars, and it's not primarily up to us to raise all this money. But it is certainly our responsibility to participate. Okay. Any other thoughts, ideas, or questions to discuss? We can certainly double back, or we can go over the sales stuff or the rental market. Let me put myself back on here. Yeah. Any other ideas here? Okay. Well, thank you all for joining. Thank you for being here with us today. And I'll be ready. Hopefully we'll have an update next week on how our hearing went in the court, and probably the expected result, but maybe some insights will come, and then we'll have some more information about what we're hearing for rent payments. It'll be early in August next week, but we'll still know a little bit and get a sense of what's going on. All right. Thanks, everybody. Good seeing you.
Thanks, JJ. Thank
Have
you.
a good afternoon.
Bye.
Thanks, guys. Bye.
Bye-bye.